What's up, guys? What's up? What's going on? Fix this camera. How you guys doing today? Turn my music down. All right, looks like the market is rallying a little bit. The Dow is up 86 points. The NASDAQ is up about 10 points. And the S&P 500 is up about 8 points. Took a couple of day trades earlier. If you go to my previous videos, I did 2 this morning. You can see a couple of live trades that I took using the mini Dow futures. I was using about $4,000 to day trade one contract. And I was trying to hold out for about $500, but it looks like the market was pretty choppy today. It says, yo, have you been paying attention to the VIX? Yeah, man, the VIX is actually up to about 26. Anytime the VIX, and guys, the VIX is the volatility index. Anytime we get a lot of volatility in the market, it means that the market can push, 100, 200, 300 points. Would you invest in Periscope? Well, Periscope is owned by Twitter. Twitter bought Periscope, I think, about 2 months ago. And Twitter stock has been getting killed right now. I like Periscope because of the live video, but Facebook just came out with Facebook Live. Now, they only rolled the platform out, I think, to Apple holders, if you're an iOS holder. But right now, Twitter is falling hard. I actually had the stock and I had to sell it because it was falling too hard. But I'm definitely interested in how far it can go. But I think Facebook may take over. I use Periscope for business, but I definitely use the Facebook Live app just because that's my personal Facebook friend. So, to each their own. You can go with one or the other, but Twitter does own Periscope. Any other questions, guys? I missed a couple. I'm sorry. The volatility index, we were talking about the volatility index earlier. It's the VIX. You can actually buy the VIX in stock form. I wouldn't advise it unless you're an advanced trader. But the volatility lets you know how volatile the market is at any given point. Anytime it's above 15, that means the market can push and pull very fast. And right now, the volatility index is pretty high. Any other questions? I was actually up in New York this past weekend. I was able to see the first snow, so that was kind of cool. I was riding the subway. I was a true New Yorker. I actually got off on Wall Street, walked around a little bit, took some pics. Had some Periscope videos of me walking near the Barclays Center, and it was pretty cool. But I got my taste of snow for the first time this year. So that was pretty fun. I was hanging out actually with a bunch of Harvard day traders. You changed how you trading today. You text me that. What did you do different? Well, usually I use the 5 and the 15-minute chart for bias. So this morning, the 15-minute charts, and this is how I trade, guys, when I'm day trading, not swing trading. But I use the 15-minute to give me the bias of the day. And this morning, the bias was short. But then I use the 1-minute chart. I actually do what's called a fake. I use scalper arrows. So usually whatever direction the scalper arrow is telling me to go, I trade in that direction. But I use the 1-minute chart for a fake. So if a scalper arrow says go long, I actually look for a short on the 1-minute chart. Kind of confusing. Some of you day traders that trade every day, you'll get kind of what I'm saying. But I love using the scalper arrows when day trading. So that's what I did differently this morning. I probably could have caught my $500. That's usually how much. I usually risk $100 to make $500 for every contract that I trade. And for you guys, I try to keep it. What is in the background? In the background is this is the charting system. I use Thinkorswim, which was bought by TD Ameritrade. And what I'm looking at right now is I'm looking at charts for different stocks or different equities that I plan on day trading. And during the day, I personally day trade from 9:30 to 12 o'clock. My main job, Tom, he said, Tommy, you have a job. That's pretty funny. Uh, oh, I thought you were calling me Tommy, like Tommy from Martin. You know, Martin, Tom, nobody ever knew what Tommy really did. And, people always talk about me being Tommy also because they never really understood exactly how I traded. But I do this full time, guys. There's no job out there that can pay me the amount of money that I can make from 9:30 to 12 trading the market. I can use about $4,000 and I can make up to $500 per contract. So imagine if I'm trading $25,000, I can buy, five, six contracts. And if five, six, if every contract can make $500, if I'm buying five contracts, I can make up, up to $2,500 in a day. Sometimes I can make that probably in about an hour. But I treat it like a business. I'm not here to brag. You have to, if you're gonna become a day trader, you have to educate yourself first, and then you need to trade paper money. Paper money is virtual money, which is not real. You need to trade paper money for about 3 months so that you can figure out the strategy that you want to use, and then you have to create a risk to reward. What's a risk to reward? Risk to reward is how much money do I risk for the amount of money that I want to make. I risk $100 to make $500 per contract. Now, on these different platforms, you can trade over several platforms. So let's say you wanted to trade for your uncle, yourself, your mother, and two other people. You can actually take the same trades. Now, on my platform, you guys only see me buying one contract, but in essence, I could be buying over several contracts, but so that I can keep it even, because most of the time I don't want to say how much I'm making. I usually say how many points I'm making. Whether you're trading one contract versus 10 contracts, you'll understand exactly how I'm trading, if that makes any sense. You can go to whatwouldjoeldo.com if you have any questions about if you're a beginner or an advanced trader. You can go on there. I have videos available for both. But if you are interested, and this is the time, guys, where you should be investing in day trading. Are you continuing to upload videos for teaching on charts? Definitely. I'm going to try to create a video each week. For the past, I've been trading since 2008. So I kind of got into I actually shaved and took a bath because I would just trade. I would go in my cave. I didn't communicate with anybody. I just traded and made money. So, I'm out in the public now, and I'm sharing my knowledge for free. So there's so much money in the stock market, I don't have to compete with anybody. But it's definitely a field that no one really understands. And the reason is because the technology wasn't there. Now the average person can buy the same types of stocks that the big boys are buying. I mean, if you go to you can trade with as little as $100, $200. You don't have to have thousands and thousands of dollars to trade. You can get into this with about $100. My kids are 10 and 9. They have an account, and they buy and sell real estate. And I watch over it, but they can read charts. They know support and resistance. They know, and they buy what they like. Like they own Disney stock, they own Nike, and you can buy one share. One share of Nike, I believe, is close to about $100. I mean, that's a lot for a kid, but you can buy silver. Silver is like $14, $15 a share. You need help with this? Everybody needs help. But like I said, there's certain steps you need to take. But it's fairly easy. It's just as easy as putting money into a bank account. If you've ever opened a checking account, it's the same way. If you want to buy stocks, see, The average person can't go and buy stocks. So what you want to do is yeah, I was just looking yesterday. What you want to do is you want to learn what ticker symbols are. Ticker symbols are the symbols that you need, that every company has. So when you go into a platform and you put in like Apple's ticker symbol is AAPL. If you want to look and see how Apple is doing, you have to understand how to read charts. How high has Apple been in the past year? How low Apple has been. Everybody is pretty much a trader. I got that from my boy Noble, because he's gonna say that I stole that from him. But everybody is an investor. You just don't know it. If you go to the store, you know how much bread is. You're not gonna buy bread. If you know that bread is fluctuating between $3 and $2, you're not gonna buy bread at $3 because you know that's the high. You're gonna buy bread at $2. The same thing with stocks. But it's fairly easy. Like I said, you can't go out and buy stocks on your own, so you have to use a brokerage account. A brokerage account is kind of like a bank account. You open up your checking account and then you use a broker to buy stocks. So you link your account with the brokerage, and you transfer your funds in and out of the brokerage account. And once you're on the broker's platform, you can buy just about anything that's on the New York Stock Exchange. You don't need a license. You don't need to have a Series 7. You just have to have funds. Scottrade is a pretty good brokerage that you can use. E-Trade, Fidelity. What company is the best? Are you bald? I'm not balding, but I am bald right now. What company is best? There is no best company. Now, if you want to know what company is the largest and the most profitable in the world, it's Apple. Apple is the #1 company in the world. For a long time, it was Exxon. Now it's Apple. So owning Apple shares is like owning gold. And you can buy Apple shares. Apple shares are under $100 a share right now. And a share, guys, it's just a portion of a company. Oh, you want to know what's the best brokerage? It's up to you. Like I said, you can use as little as $100 or $200. And like I said, E-Trade. I use Scottrade for stocks. Fidelity is a good one. If you want to learn if you want to use a platform to look up charts that's free, you can go to, I believe it's called barcharts.com. You can look at charts. You can plug in ticker symbols for stocks. If you own a smartphone, every smartphone on the front page has an app for stocks. And it'll tell you every day how high and how low the stocks are. Look at it. Test it out. Start following stocks that you like. I always tell people all the time, don't take a stock tip from anybody when buying stocks. Buy what you know. It's just like if you were going to start a business, what business, do you fully understand? I know a lot of people that want to get into the restaurant business. So I tell them, okay, if you have funds, why don't you follow restaurant stocks for a while so that you can see how they operate in this particular environment? And in the meantime, you can see if they're profiting or if they're losing money. Because if a big name company like Chipotle right now is going down, but the big name companies are going down in stock price, then it might not be time for you to open up your restaurant. Because if the big boys are not able to withstand the environment, how do you think you're going to? And I know a lot of people that before they open up their businesses, they will invest their money in the business first. Once they make a profit, they can use that profit to open up their businesses. So instead of using $100,000 to open up your restaurant, why don't you use the $100,000 to invest in a restaurant company that's on the stock exchange? If they go up 100%, you make $100,000. Now you can use profit to open up your business. And if it fails, at least you won't lose any money. I mean, you made $100,000, you put it into your restaurant, and now that restaurant you can open up the restaurant with equity that you made in other restaurants that were doing well. Companies do it all the time. Like, most people don't know that Microsoft actually was invested in Apple. So as Apple was growing, Microsoft was growing. And most people think that they're battling each other, and they don't. McDonald's owns Microsoft stock. That's just how big companies operate. They figure if they're not doing well, if their competitor is doing well, they won't fall. They won't, fall by the wayside. Any other questions? I know I missed a lot, and I'm sorry. You guys have some good questions today. Hey, hearts. Love the hearts. Love the hearts. But Fidelity is a good brokerage. Scottrade, E-Trade. Now I use that for my stocks, guys. When I'm buying stock, I use those different platforms. Analyzing a company of interest. Analyzing a company of interest, how? I really don't understand it, but I do use. Okay, I'm a technician. So what's a technician? A technician is someone that analyzes stocks using a charting system. All right, most advanced traders, most hedge funds use. Wait. All right, I'll talk about my strategies in a second. Most companies, most hedge funds use technical analysis to follow different stock. So what's the difference? Okay, back in the day, we used fundamentals to invest in the stock market, fundamentals. So we said, all right, this company is doing well. It's going to profit this amount of money. They look at the PE ratios. They look at its earning potential, and they come up with an appraisal of how much they think that particular company is going to be worth in a couple of years. And that's how people invest, which is good. A technician is someone that says, okay, this company is fundamentally good, but as the price is going up, I want to know when is the best time to own that stock and when to sell it and when to get back in that stock. And that's what advanced traders do. They look at the technical side of the stock. Now, the best traders are people that combine the fundamentals and the technicals. And I call it the funda-technicals. You take fundamentally good companies and you use techniques to look at them on charts. Now, you got to understand how to read charts if you want to invest in the stock market. I remember back in the day, you used to be able to just pull up a newspaper and look at the highs and lows, but that's the past. That's not how people invest anymore. You got to learn how to use your trading systems. You can actually buy and sell real estate. You can actually, I'm sorry, not real estate. You can buy and sell stocks from 9:30 until 4 p.m. Eastern Standard Time. 9:30 a.m. until 4. You can buy and sell any type of stock. Now, you can buy and sell stocks from your phone. You don't have to be in front of a computer. You can go into your broker account or your TD Ameritrade account, and if there's a stock that you want to buy, you can buy it while you're at work, while you're at lunch. You can provide yourself with alerts that says, hey, Apple is at $100 right now. If it ever falls to $90 a share, I want to buy one share. So you'll create an alert for yourself. You can create these things with the platforms. And that's what we do. I follow a lot of stocks. So I can't follow them all at one time, but while I'm doing my technical analysis, and I have a very good video on how if you go on my website again, which is whatwouldjoeldo.com, I have a video about how to read charts. Definitely watch that video first. And then I have another video that shows how I do my technical analysis on a stock. What am I thinking? How do I think? And the way that I think and the way that I look at a particular stock is how most advanced traders look at stocks to determine when are they going to get in the trade, when are they going to get out the trade, what's the risk to reward, if I'm going to go long, if I'm going to go short. Those are other terms that you guys are going to have to look up. In the stock market, guys, you can make money if a stock goes up, or I can make money if I bet on the stock going down, which is kind of wild because just about in every business, you usually want to buy low and wait for a price to go up. It kind of tricks your mind when you say, hey, I can make money when a stock goes down in price. Yes, if you choose that direction. Now, if you choose a direction to go down and the stock goes up, then you lose money if you decide in the beginning what direction you want to take. But that's all education. That's you're going to have to educate yourself on what's long and what's short. If you don't understand that, go Google it. The Big Short is a great movie that you need to go see if you are if you're interested in the stock market. That gives you an idea of how the other side thinks. See, money is like energy. It's neither created nor destroyed. It's transferred from one entity to another. So if a person is losing money, there's another person making money. When all that money was lost when the real estate market crashed, that money didn't just go poof in the air. That money went from one person to another. Now, I used to trade options, but options are very, 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 very advanced. I would tell people get 10,000 hours under your belt day trading stock and futures, maybe even foreign exchange currency. But don't get into options until then, because you want to have your bases. You want to have the basis of trading in place first. You don't want to go out there, because I know a couple of people that's blown up accounts and they've actually owed money afterwards because they didn't know what they were doing when they were trading options. They started out with a $10,000 account. They may have made 100% return, and by the end of the year, they ended up owing $30,000 or $40,000 to the brokerage because the option went sour or went bad, and you don't ever want to get in a position where you owe money. So I wouldn't suggest options until you put 10,000 hours into trading stock and day trading. Believe me, I've blown up many accounts. I didn't have anybody there that could teach me how to do it. I started options in the beginning. My very first account, 50K, blew it like a couple of months. Can you place the movie suggestions on your website? I actually have a video about the Big Short. If you ever saw Trading Places, which is an old movie with Eddie Murphy, that movie dealt with futures trading. I think they were trading orange juice. If you want to know about an option movie, if you've ever seen Pelham 123, Pelham 123, I think, with Denzel Washington, there was a guy there that used options to, I think he went long in gold by placing fear in the market. And it shows you how that when people get frightened about the market, bombs go off or this, that, and the other, gold and silver usually goes through the roof. So it's all, and there's a conspiracy theory that when the World Trade Center was blown up, that there was a big option trade that was shorting the market. And they're still investigating it to this day. They don't know exactly where it came from, but a big, big, big option trade came in. What does that mean? That means somebody see, when everybody goes into panic mode, stocks tank. So if you can make money because stocks are tanking, if I know what's going to happen before it happens, and I say, hey, the U.S. market is going to tank next week, let me bet $1 million in options that the American economy is going to tank. That $1 million can turn to like 20 million or 200 million if you plan it right. And a lot of options came in right before the World Trade Center thing happened, and somebody made a whole bunch of money. And a lot of people think that it was just about blowing up our money center, but it wasn't. It was, if you know how the market's going to react to a certain situation, then, like I said, once you see those different movies, it'll give you a better idea of how stocks work, how shorts work, how going long. But I've been doing this for so long, hopefully I'm not confusing anybody, but you want to start small. Like I said, you can go to my website. I have a couple of videos that are up. Start slow. Like I said, you're not going to become an advanced trader until you put 10,000 hours into it. So that's a long time, a couple of years maybe, before you actually have a system that's in place. But you want to start small. Don't start with a lot of money like me. I blew up two $50,000 accounts immediately. And luckily, I made enough money in the real estate market before it crashed that I was able to withstand the losses. And when you lose money, you quickly learn how to do things the right way. But I didn't have anyone like myself or other people that I follow that could help or show how to trade in the market. I had to learn from experience. So I'm trying to tell you guys exactly what to do so you won't make the same mistakes that I made. And a lot of people ask, why are you doing this? Why are you doing this? And I'm like, because I hate seeing so many people lose money in the market because in a sense, they're gambling. They don't have any education behind it. They have no strategy. They're just throwing money at something and saying, oh, I hope I get rich. I mean, if that's the case, then go play Powerball. But if you treat this like a business and you have different areas that you're buying and that you're selling, then you can make money in this market easily. And I mean, everybody knows how the job market is right now. It sucks. Like nobody's hiring anybody. And if I had I'm gonna be honest, if I had my own business and I was hiring individuals for it in this particular environment, I'm gonna go for the smartest people and I'm gonna try to pay them the least. So am I a billionaire? Oh, heck no. I'm not a billionaire. Hopefully I can get to that level. But making millions doing this is not it's not far-fetched. Like I said, I'm using right now, I trade the futures market to give you realistic expectations on how much you can make. With $4,000, you can make or lose $500 a day. You can make up to about 1,000. Some days you can, like last week, there were days where the $4,000 made $2,000. And you do the math. If you had $4,000 and you made $500 a day, then that means after about a week or two, not only can you buy more contracts, but the money grows exponentially. And like I said, with you don't really need but $25,000 or $50,000 to day trade. Because if you had a $50,000 account, I don't know how much you want to make, but with a $50,000 account trading futures or day trading stock, you can make $2,000 or $3,000 a day. I mean, what other jobs out there are paying that type of money? I mean, it just only makes sense to me. But most people don't, their whole life, people told them, oh, the day trading is terrible. Any job is gambling if you don't have any education behind it. I mean, and that's real. If you go into anything without any education, chances are you're not going to do well. But if you educate yourself, you put in the time, you're going to do okay. Believe me, you have everything in place. You have your risk to reward. You have your strategy. You're going to be all right. How do you become a full-time day trader, especially as an African American? Well, look, money, I mean, when you're day trading and I'm trading with people, no one knows what color I am. Money is green. That's why I love this market. There's no bias. Nobody knows each other. You're just buying and selling equities. So as an African American, I would say, get the education behind it. Start small. Start with a small account. You're going to need money to make money. I don't care what business you decide you want to be in. But why is this business better than most other businesses? Because your overhead is just your computer. I don't have to worry about paying other individuals. I don't have to worry about things going wrong. And your only overhead is the money that's in your account. So, your computer and your time. And once you develop a strategy for yourself, you're going to be okay. So as an African American, any American, I mean, you could be whatever race, whatever, it doesn't really matter in this particular market. And that's why I love it. There's no bias. There's no discrimination. All you need to be able to do is open up a checking account and then link that checking account to a brokerage. And then once you do that, all they want to see is that you have funds. Once you have funds to buy equity, they can't tell you can or cannot buy a stock. Nobody's there's no application process. If you have $100 and the stock is $15 and you divide that by 15, that's how many shares you can buy. If it goes up in price and you sell it, you make money. If not, you lose money, and and everything is liquid, guys. The money is there immediately. It's not like you have to wait 3, 4, or 5 weeks for the money. If I make $200 a day, I have access to $200. Do you pay taxes? Oh, most definitely. You can't make any money in America without paying any types of taxes. Do you have any coaching courses available? I don't personally do coaching, but I do have an individual that I work with. His name is Noble Woods. He has a class called Limitless Class. I think you can go to limitlessclass.com. Let him know that you were referred by me. And he pretty much teaches you the basics of trading. Once you learn the basics of trading, you'll be able to trade everything. Everything works hand in hand. You have to know how to read charts. You have to know how to create a strategy for yourself. You have to know a risk to reward. Can you guys post those questions again? I just missed like 5, and I'm sorry. But those are coaching classes. Do the classes cost money? Of course, it costs money. Now you do have YouTube, and we're in the information age. Any question that you're asking me right now, Google will answer it for you. You just have to take the time to go out there and research it. But you definitely need education. And once you get the education, you put your experience to work, you see how it works. And believe me, once you figure out how this works, you're not going to want to go back to a 9 to 5, because a 9 to 5 limits you. You know exactly how much you're going to make. And it's cool. I never tell people to quit their day job. Keep your day job, buy stocks, and when you have a certain amount of money set up where you can fully transition over to being a day trader, then I would do it. But the best situations are when you have one person in a household that earns the 9 to 5 every day. You know everything is paid, but you have to have somebody in the family that's, I wouldn't say a gambler, but takes high risk chances. Even in your portfolio, let's say you had $10,000. You always want to devote 20% of your portfolio to high risk stocks. That's the only way you're going to become a millionaire. I wouldn't say the only way, but that's the fastest way to becoming a millionaire. Millionaires are made through real estate and the stock market and inheritance. And most of the time the inheritance comes because somebody before you owned a bunch of real estate and a bunch of stocks. It's a circle. So if you are just like most African Americans I know that don't understand what trust are or inheritance, and you want to be the beginning of that tradition, this is where you have to start. Keep your day job, start investing in stock. Warren Buffett started with $1,000, guys. Warren Buffett turned $1,000 to, first of all, he went from 1,000 to 80 billion. Then he gave away 40 billion. And then he made the 40 billion back because he knew how. You got to understand how, once you learn how to trade in the stock market, you will become a better business minded individual when going into any other real estate ventures. Do you own real estate now while you're trading? Oh, definitely. You want to diversify yourself. I tell people all the time, don't put all your eggs in one basket. You definitely want to, but you got to know where to start. It starts by having a job. Like, let me be real with you. You got to have a job so that you can make funds. You want to get out of the rat race, meaning you want to pay off all your credit cards. You want to pay off all your lines of credit. I don't have any credit cards. The only debt I have is the real estate that I own. My cars are paid off. I'm not here to brag. I'm here to tell you that I've done all the mistakes that everyone did in the past, and I was fortunate enough to get myself out of it. I owned millions of dollars worth of real estate that at some point in time was inflated so much that it really meant nothing. I was paper rich, but that didn't mean anything. And I've done every business known to man, and I wish I would have learned how to trade the stock market when I was younger, because I would have millions upon millions upon millions of dollars right now. I was up in New York this weekend hanging out with a guy that worked for Goldman Sachs, hung out with another guy that went to Harvard who was a trader. This cat made freaking $20 million last year. Like, for real? $20 million trading? Went to Harvard, developed, he was a math major or what have you, created a strategy, went to a large bank, showed them the strategy that he created, traded money for them, made $20 million, retired. Black guy. So it can be done. And it actually gave me, I thought that I was successful in what I'm doing. I didn't make $20 million, but I know that I can get to that point trading the stock market. It's the quickest way to becoming a millionaire outside of the Powerball or, like I said, inheritance or real estate. Even with real estate, you're going to have to wait another 30 years in order to make those funds. In the stock market, listen, even if you keep it easy, it's nothing to make 10% in 1 month trading futures. You can make 10% in 1 day. I use these numbers. If you had $500, okay, if you had $500 and you made 10% every month, and you took off November and December, that means you made 10% January, 10% February, 10% March. That means in 10 months' times, you will make 100%. So every 10 months, your $500 will flip to 1,000. Then 1,000 flips to 2,000. Then 2,000 flips to 4,000. Then 4,000 flips to 8. 8 flips to 16. 16 to 32. 32 to 64. 64 to 128. 128 to 256. 256 to 5 something. And then in that 11th year, you make $1 million. That's just making 10% a month. Now, like I said, you can make up to 50 or 100% a month. I know some guys whose goal is to make 100% a month. So 11 months from now, with $500, they'll be a millionaire. Like, I know cats that spend $3,000 at the club every night. And I know for a fact that they're never going to become a millionaire just by how their mind thinks. But, I'm not saying don't go to the club and have fun, but instead of spending $3,000, why don't you spend $2,500? And then every week, try to flip that 500 for 11 years until it gets to $1 million. Keep your day job. Just follow that 500, just 10% a month. If you keep it at 10% a month, 11 years from now, it should be $1 million. Some of you guys are young. You start when you're 18, millionaire by the time you're 29. Now, I know some guys down at the University of Florida, and this is a true story. Ask Mr. Craig Doldrin, because he showed me. He was trading foreign exchange currency. Now, the students at University of Miami, they are far ahead of everybody. They're actually trading Forex their freshman year in college. So they start off with $500. By the time they graduate in 4 years, most of them have at least $250,000. Liquid. $250,000 starting with $500 trading foreign exchange currency. I was going to the class. Well, actually, they have a school that's on the Strip in Miami. So they'll leave, they'll go to class during the day or they'll trade in the morning and they'll go to class and then they'll come back because the foreign exchange currency is 24 hours. These fools were driving back. Like, when I went to the class, there were Rolls-Royce Phantoms sitting outside the school, Bentleys. And I'm like, whose cars are these? They're the students, because they're understanding exactly how to make money. And it's real, guys. It's real. Like, who wouldn't risk $500 to try to make $1 million? Even if you lose the $500, it's still education. And then you re-up and put another $500 and say, you know what, I lost that $500. Any education that you're getting these days anyway is going to cost what? You go to school to get a degree, you're going to spend $20,000, $30,000 a year, $100,000 when you get out of school. I promise you, if you trade for 10,000 hours, you're not going to have to spend that much money. Yes, you're going to have to get educated. Yes, it's going to cost money. You're in Miami now. Where is that? It's on the Strip. I have to ask my friend. His name is Craig Doldrin. He's actually, I think he calls himself Mr. Craig. If you go through some of the followers that I have, his name is Mr. Craig. He knows the exact school. But it's a foreign exchange currency program, and it's on the strip. Like imagine trading foreign exchange currency, and you look out and see the beach. But these guys are doing it, and I mean, this is just the future. This is right. You okay? Hit me up later, man. Any other questions? I'll try to get that information for you for the school. I think two of the students actually created their own strategy that they're selling as well, if they haven't already sold it to some major companies. But it's the future, guys. If you want to be part of the future, you need to get in now. I mean, you'll be able to trade for life. Once you become a trader, it's like the Matrix. You start to understand and see things differently. Great questions today. If I missed your question, please post it again. I will try to answer it. Can you educate about going long versus going short? All right, so you have bulls and you have bears in the market. All right, there are two major stock exchanges in America. You have one in New York, the New York Stock Exchange, and you have one in Chicago, which I believe is called the CME, the Chicago Mercantile or something like that exchange. Excuse me if I said it wrong. All right. If you notice, if you follow sports teams like the Chicago Bulls and the Chicago Bears, most people thought that they picked the mascots because they're bulls and bears running around Chicago, but that's not the case. They're bulls and bears because of the stock market. What is a bull and what is a bear? All right, a bull is being bullish or being a bull is wanting stocks to go up in price. It's actually the regular way of thinking. Going bearish is wanting stocks to go down in price. So you have bulls and you have bears that fight every day. You have a person that wants Apple to go up, and then you have another person that wants Apple to go down. This person will say, hey, I'm going to purchase Apple stock at $100 and I want it to go up in price. If it goes up in price, I make money. You have a bear that says, hey, I want Apple. They buy it at the same price, but they want the stock to go down in price. It's just like one person wants the New England Patriots to win, and then somebody else wants Denver to win. But you can't place a bet that's one-sided. You have to have somebody that wants New England to win, and you want somebody that wants Chicago to win this weekend. And then once that happens, the broker is the person that makes the deal go through or makes the bet go through. All right, bulls want things to go up. That's called going long. A bullish individual or a bullish trade is a trade that you take, you want it to go up in price. That's going long. Going short is being bearish. So bullish going up usually represents a green color. Bearish going down usually represents a red color. What's funny is that if you go through New York or if you see any type of financial institution, usually their mascot would be a bull. You will never, ever, ever, ever see a financial institution whose mascot is a bear, because bears want prices to go down. All right. It's always going to be some type of bull or something that's close to looking like a bull. So again, bullish, usually represented in green, means that you want to buy a stock and you want it to go up in price. When it goes up in price, you make money. Bears are people that want the stock prices to go down, and if the price of the stock goes up in price, they lose money. All right, and that's called going short. So you can go long on a stock. So if you hear somebody that says, I'm going long, that means they took a price, they wanted to go up in price. If you hear a person say, man, I'm going short, that means they're making money, or they position themselves that as the stock goes down in price, they make money. I know people are like, how the hell can you make money with the stock going down? Again, if I took a price, let's Chipotle, for example. So if you don't know what's going on with Chipotle, Chipotle is a restaurant stock that had an E. coli scare the last couple of months. So common sense tells you, hey, if an E. coli scare just came out about a stock, is the stock going up or is the stock probably going to go down? Or let's take example, if you hear that there was an Exxon tanker that just spilled oil out in the ocean, is that stock going to go down in price, or is that stock going to go up in price? Well, in both scenarios, the stock is probably going to go down. So if you are a bear and you want to go short, let's say that stock was $100. You can say, hey, right now the stock price is at $100. I think it's going to go lower, so I'm going to short. So if you start shorting at $100, when the stock goes down to $90, you are now profiting $10 per share that you bought. If that stock goes from $100 to $50, you are profiting $50 a share. Now, let's say you got in late and you say, man, I think the stock is going to go lower, and you position yourself at $100 thinking that it's going to go down so that you can make money, and let's say it goes up to $150, then now you are losing $50 a share because you decided to go short on that particular stock. You have to pick your direction or your bias when you're placing the trade. And you can also flip it while you're in it, but that's kind of advanced. I don't really want to go there with it. But that's the difference in going long and going short. Hopefully I made it clear for you guys to understand. Any more questions? You guys have some great questions today. Hey, I love the hearts. Any more questions? I've been talking now for about a good hour. Roth IRA or mutual funds. Now, my specialty is day trading and investing in stock. Roth IRAs and mutual funds are great investments. I call that, that's like your secure money. If you're young, I wouldn't really suggest the IRAs or the, except for tax purposes. I would definitely talk to a tax specialist to ask them how you should handle your money. But if you're young, I would say, go out there and try to make as much money as you can quickly, because you can lose it. You can lose all of it, and you can still get to where you want to get to, before you get older. Once you start getting into the IRAs and the mutual funds, I mean, you usually make what, 3, 4, 5% a year, which is cool. You have $1 million or $10 million set aside, and you're living off of the interest, the 3 to 4 to 5% a year. You can make a living off of that. But I have a lot of friends that may have like $500 or $1,000, and they put their money in mutual funds, and they're really not making that much money a year, and they're expecting to become millionaires off of it. And I'm like, you're not going to become a millionaire off of mutual funds with $1,000. Like, that's just realistic expectations. If you're trying to grow your money and you're trying to grow your money fast, you have to get into some high, and I don't suggest penny stocks either. Penny stocks are cool. I do own penny stocks. But when I invest in a penny stock, it's just like I'm investing in a lottery ticket. I don't expect to win, but if I do, I'm going to win big. So I wouldn't say load the boat and put all your earnings in penny stocks, because I know a lot of people that are like, man, because I mean, you can make 100, 200% return in one day, but you can also lose all of it in a day or two. So, you definitely want to get into some high risk equities or stock. But you also want to treat it like a business and know exactly what price you'll get out in case it drops too low, and have a target price, a target price so that you'll know when to get out of that equity. But I never tell people not to do it. I say diversify, do it all. They're a penny for a reason, definitely. So to explain to you guys what a penny stock is any stock that's under $3 a share. All right, anything that's under $3 a share goes on a pink sheet. Once it goes onto a pink sheet, it's not regulated by, it doesn't have the same regulations that the big stocks have. Hedge funds do not like investing They do not like investing in anything that's under $3 a share. Once it goes under $3 a share, you usually see the stock tank. Usually, if it can get above $3, like penny stocks are great because if you can get in, for a penny or 10 cents, and then somehow or another it gets to $3, and then the hedge funds come and buy it, the hedge funds are going to push it from $3 to $5 or $10. And when that happens, that's when you become rich. That's what happened with if you guys are technicians, go and look at a lot of cannabis stocks about 2 or 3 years ago. Those penny cannabis stocks went from, I think in some cases, like a penny pretty much, all the way to about $24 a share in like 3 months. So to give you an idea, $1,000 turned to like $1 million in like 3 months. And it happens, guys. And I own a lot of cannabis. The only penny stocks that I own are cannabis stocks, because if that industry blows up the way that I think it's going to blow up in a couple of years, if all the states decide to legalize marijuana, those stocks are going to hit again. And they've already hit one time. And I know greed is a major factor in the stock market. And if if their friends are telling them how much they made the first time, I'm pretty sure there's going to be a second time that happens. It might not happen for 10 or 15 years, but it doesn't matter. I don't have that. I didn't load the boat. I have just enough shares that if something happens, I think I spent $100 and got like 100,000 shares of some company. If those 100,000 shares if they ever get to $1 a share, that's $100,000. If it gets to $1 a share and then somehow it blows up and goes to $24 a share, that can give you an idea how much money I can make off of my little $100 investment. I don't really expect my $100 investment to make any money, but it was small enough so that I can be exposed to it just in case that industry blows up. But yeah, so it's a penny for a reason, guys. Once it hits $3 and it goes lower, I wouldn't advise. I know some people that use 80% of their capital to buy penny stocks, and that's just ludicrous. You're just throwing money away. But can it hit for a lot of money? Most definitely. I mean, that's why you can go and do your technical analysis through your charts. You can go all the way back 20 years and see how a stock has performed to give you a realistic idea of how far or how much that particular stock can get. I know so many people that they'll invest $10,000 in Apple and they're like, all right, make me $1 million, Apple. And the funny thing about it is, Apple, even if it turns, Apple can go up another 1,000%, which is crazy if it did. But right now, with Apple being the largest company in the world, chances are, they're going to start paying a dividend and the stock price is not going to move that much. So it's not going to really, you got to get into high growth companies if you want your $10,000 to turn to $1 million. But the only way you're going to be able to do that is you got to see where the stock has come from and its earning potential, and you have to do your research. Yeah, Apple is a unique stock. And it's a big tech stock, but that's what I mean. Some people, they don't have the knowledge, and then they don't even know what price they bought it at. And I'm like, okay, if you were to go buy a car, or if you were to go buy a shirt, or if you were to go buy a house, you're not going to just go out there and not do your research and buy it. But 99.9% of individuals I meet, they do that. And I'm like, how can you buy something and not know the history behind it? Like, okay, I bought Apple at $100 a share, not knowing that, it's going to fluctuate between maybe 150 and 75, maybe for the next 3 or 4 years. And they're wondering why they're not getting rich off of Apple. And I'm like, well, if Apple's high this year was $135 a share, it's now at $100 a share. So at the most in a year, maybe Apple can go up 30%. If it goes up 100%, that's great, but it's not going to go up 1,000%. And anything can happen. Anything can happen, guys. But when you become a trader, you have to put in realistic situations. Like, okay, Apple's high was 135. I'm in it now at 100. All right, in order for me to double my money, that means Apple has to go to $200 a share. How long will that happen? Well, it might be 3 or 4 years if I go back and I look at the chart. So to expect me to make 100% return in the next 2 months is unrealistic. You're not going to know that unless you look at your charts. You're not going to understand how to read charts until you do the education, and it's not that hard. Like I said, look at my video on reading charts, and I mean, it's very simple. You should be an expert on reading a chart as soon as you finish reading the video. You'll be able to pull up any chart and understand it. Now, developing your strategy, that takes years. No, everybody's not going to trade the same way. Just like every basketball player, I don't care what type of education we all go through. Even if we all go through the same program, we're not going to have the same basketball game. Like, if you're 7 foot, I'm not expecting you to be able to dribble the ball like the 6 foot point guard. No matter what your situation is, you got to learn, how you deal with the market, and how, it's mental. And developing your strategy over the years, you start to understand where your strengths are and where your weaknesses are. Everybody's not going to trade the same. You can't just do exactly what I do. We can do things that are similar, but we're not going to trade the same exact way. That's something that you're going to have to develop over time, and it's not going to happen overnight. But you definitely want to do it. So, all right, guys, I'm going to get on out of here. You guys had some great questions today. Again, you can go to my website at whatwouldjoeldo.com for any videos there. The website just went live, so there's not that many videos there, but the videos that are there, they're real. I'm trading real money. Real guy, average Joe, just trying to teach you guys how to get in and out of the market, what to expect. If you want to get educated, you can contact Noble Woods at limitlessclass.com, or you can send me the information and then I'll refer you over to him. Any questions that you may have, you can go on my website and ask me anything. I'll try to answer it in a prompt manner. And I guess that's it, guys. I am out.